G'day ladies and gentlemen, welcome back to another Bitcoin video. We have a very important 24 hours ahead, and then on top of that, in the next 3 days, we have the FOMC decision, and we also have the monthly candle close. Back to what I said about 24 hours, we have the weekly candle close in under 24 hours, about 18 hours by the time this video gets out, and the reason why that's important is because we have a wedge on Bitcoin that has been forming since January 2021 that could actually be breaking to the upside if we see the weekly candle close above around 22.3k, which certainly is a possibility. I mean, we're well above that price level right now. So if we see that close above 22.3k, the macro momentum on Bitcoin could be powering further to the upside, and it could actually trigger another move. But ultimately, the sideways consolidation will come to an end very shortly. There's evidence of that in the charts. There's evidence of that in the fact that FOMC is soon. So let's get straight into the video and discuss what will happen next. I want to quickly give a shout out to the VIP group. If you want to become a VIP member with the Rules of Crypto YouTube channel and trade altcoins with me on Telegram, you can do so using the pinned comment link. There's a link down there for the information regarding the group, and you can check it all out and you know, decide for yourself. It's 100 USD for 3 months. We've got about 115 members in there. So yeah, make a decision on that one and check it out down there. But let's get into the video now. So essentially, and this is the main, well, there's a few topics of this video, but the most pressing one really is this, right? 18 hours right now until that weekly candle close. As I described in the introduction, we have a wedge which is stemming from a wick all the way back here in January 2021, making it a 24-month long, a 2-year long wedge that is formed on Bitcoin. As you can see, yes, we are above that wedge. It looks like a breakout to the untrained eye. However, it's not a breakout yet because we haven't actually closed a candle above it. We've only opened a candle above it. We haven't closed above the wedge. So this wedge, right, and this close we're seeing in 18 hours could be the first candle close we get above the wedge, which would fully confirm a breakout of that wedge and renew macro momentum. Now, if we zoom out in this chart, we can see that this wedge has formed in a pretty critical location. It's actually formed on top of an 8-year uptrending yellow support line. And the apex for this wedge, on the occurrence that we don't break it to the upside, which is possible, it's not likely, but it's possible, is the apex is looking at around mid-April. So regardless whether we break it now or not, right, within 18 hours, we will be breaking it, between now and mid-April. So it's going to be coming regardless, and it most likely will be breaking to the upside at some point. I don't see us breaking to the downside, especially with the confirmation we've seen that the bottom is being in. Well, that's an opinion at this point. We need to break 28.6k to confirm it, but that's my personal opinion. I think the bottom is in. But yeah, ultimately, next 18 hours, very important. Watch that level, like I said, at 22.3k, 22.2k. If we close above that, that's very good for the macro momentum. Now, moving forward, because that's 18 hours away, now 2 days and 19 hours away, so almost 3 days away, we have another very important close, and that close is coming through the monthly candle. And as you can see, the monthly chart RSI, I'm going to make this line pink so you can see it, the monthly chart RSI is pretty good at predicting Bitcoin bottoms, okay? It predicted the bottom at this support level here in 2015, predicted the bottom at the support level there in 2018, and it failed to predict the bottom in this bear market. However, we did drop below that line, and it acted as resistance on this occurrence here. Now we're getting back above that line. So this line that previously predicted the last two lows acted as resistance, and now if we close this monthly candle, I don't know exactly where the price would be. It's very hard to tell with RSI, but if we close this monthly candle above that pink line on the RSI, say above, I don't know, 21k, you know, and realistically, if we close above the wedge, okay, we're probably going to be doing that because it's very unlikely to close above the wedge and drop back down. So if we close above that pink line on the RSI, that is very good, again, for macro momentum. Another thing that's very good for macro momentum, regardless of RSI on the monthly chart, is if we can close a candle above 19.7k. Right, 19.7k on the monthly chart, or around that price region you can see there, is basically where the 2017 all-time high was, and we can see that acted as a support on the price chart for 1, 2, 3, 4, 5, 6 months, losing it on the 6th month, and we're getting back above it now. So if we can close the monthly candle in 2 days and 19 hours above, say, 19.2k, which will happen if we close above the wedge in not 18 hours, so it's linked together, the macro momentum of Bitcoin is going to get renewed even further than it already is. And let's put it this way. Macro momentum right now is quite strong. You know, we broke above bull market support band, broke above 200-day SMA, broke above the 50-day SMA, broke above this downtrending yellow line on the daily chart, broke above, for example, the RSI downtrending line we had on the weekly chart as well. You can see there, I just drew it in. We broke above many, many things in the meantime, all while holding this uptrending support level, and all, you know, this 8-year yellow line here, this uptrending support level, and all in the meantime, while maintaining the 4-year cycle theory's prediction for a Q4 or early January bottom. So it's looking great. Bitcoin's looking really good on macro. You really couldn't ask for much better than this. We've also seen the strongest month, of January in the entire price history of Bitcoin, sparing 2013. So I'll say that again, right? Out of all the Januaries in Bitcoin's price history, this month has been the strongest. This January 2023, has been the strongest. It's been the most gains. We've seen a 44% gain in the month of January. 2013 was 44% as well. So extremely good month. Extremely powerful bounce of support there, and extremely good confirmation. It's preliminary, yes, but it's good confirmation that that 4-year cycle is maintaining, because even in this time period, the macro is not looking too good, and Bitcoin's just shown that it's breaking away from that macro quite strongly. We've seen correlation between Bitcoin and the DXY and the US dollar really start to decrease, and we've looked over a chart, displaying that before. Between August and late December, the correlation between Bitcoin and the US dollar went from 0.6% correlation to 0.3% correlation, which is crazy good. And obviously 1 being the maximum correlation. So we've got a couple countdowns, right? 18 hours for that weekly candle, just under 3 days for that monthly candle. And we've also got 3 days and 13 hours for FOMC. I don't really need to explain FOMC. I think people are very well aware of it by now, especially if you stuck around for this long in the bear market. You've probably seen a lot of them. You've probably gone through a lot of them. Essentially, FOMC is the interest rates decision. Now, the interesting thing about this is that the market is fully expecting at a 98% probability that we see a 25 basis point hike, which would be a decrease from the 50 basis point hike we saw in the last hike, and a further decrease from a 75 basis point hike we saw in the hike before that. So, the Fed is very much winding down the magnitude of their rate hikes per hike, which is great to see. It's showing that, this shock we're seeing in the markets from interest rates rising will be dwindling, will be decreasing, and we're seeing the S&P 500 actually show some strength here. Which is quite surprising. We had a break of this downtrending yellow line in the S&P 500, and on top of that, we had an inverted head and shoulders pattern quite clearly forming there that we've just recently broken to the upside. Yes, we are testing resistance right now. If we manage to break that resistance, there's really not much stopping the S&P 500 from skyrocketing all the way back here to 4,300 at 4,388. Now, do I think the S&P 500's bottom is in? It's very hard to say. Historical trends would say no, and historical trends are relating to the fact that the S&P very, very rarely bottoms out while interest rates are rising, and they still are rising. They're not decreasing yet. So it's based on that, you can say, well, probably not. But with that said, we've made some good progress, and you can't deny that. We're up significantly from the lows now, and we're up, a massive amount here at 17%, which is a lot for the S&P. And we've, just broken above a major downtrending line that kind of was this bear market line for the S&P. So, you can say all you want that the S&P is going to go further down, and I probably agree with you. I don't really have an opinion on it. I probably agree that it is going to go further down due to, blah, 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 recession, all that. I can go on for days about that. But the point is, the fact that it's making good progress here is good to see. Okay, it's good to see, and it's undeniable. And this inverted head and shoulders pattern is interesting. If we break above this resistance, perhaps we could see something abnormal happen, and maybe the S&P has bottomed. We'll see. It's very hard to say at this point in time, because obviously all the historical trends say that it's going to go down further, and so you can't really debate historical trends. For that reason, I'm staying away from the topic, because it's just too hard to talk about. There's not enough evidence to really discuss it. But ultimately, I don't think it matters what the S&P does, and this is something I covered yesterday. Bitcoin is not correlated to the S&P. Bitcoin's not correlated to traditional markets. Okay, it's actually not. All right, which is interesting. People get shocked when I say that. That's not how it works. Bitcoin's not correlated to traditional markets. Bitcoin's correlated to the economy. Okay. And mainly, Bitcoin is correlated to the strength of the US dollar. It's correlated for DXY, okay? Bitcoin, and this is something we looked into in my last video. You can check it out, the full analysis there, and it explains it very, very well. Bitcoin is reverse correlated to the DXY. It doesn't matter what the S&P 500 does. Okay, that's low IQ looking at that. S&P 500 doesn't matter to Bitcoin. It doesn't. The DXY is what matters to Bitcoin. Okay, we've seen this time and time again. When the DXY went down from 2016 to the end of 2017, Bitcoin saw a massive bull market. Okay, it uptrended during the period into a COVID drop. Bitcoin saw a bear market. Okay, when it bottomed out, it started dropping again during the end of the COVID drop. That's when Bitcoin saw the major bull market. It double bottomed, Bitcoin double topped. It skyrocketed in 2022 and late 2021. That's when Bitcoin saw the bear market. And guess what? Ever since November, it's been going down, and that's when Bitcoin bottomed. So to act like Bitcoin is so connected to the S&P and all, the DJI or something like that is ridiculous. It's just not true. Simply incorrect. Okay, it's correlated, reverse correlated to the US dollar, the DXY. Guess what? The DXY doesn't really care too much. Well, it does care, obviously, but it's not necessarily pegged to the fact that if we see a recession, it's going to go up and hence Bitcoin's going to go down. So that's my argument for that. I also think the 4-year cycle theory is very, very strong, and I think it's stronger than traditional market pressures. So yeah. But I went into that at a full extent in yesterday's video, and if you really want to check it out, you can check that out. A lot of people probably disagree with me on there, but the reality doesn't change. Whether you disagree or not, you can't deny the fact that Bitcoin is reverse correlated to DXY, and you can't really deny the fact that regardless of the economy, the DXY tends to kind of do whatever it wants. So we could very well see the DXY decrease even if the S&P 500 starts dropping again. We could see it happen, okay? So that's very important to note. Now, it wouldn't be completely normal, it wouldn't be completely traditional, but it very much can happen. So yeah, other than that, we're seeing the total cryptocurrency market cap, for example, see a wedge on the RSI coming into compression there. We've seen sideways price action for a number of days now, and I do expect the FOMC decision and obviously what's happening here with the wedge on Bitcoin and the monthly chart, but ultimately just the FOMC decision will bring up some short-term volatility and trigger the next move for Bitcoin on a micro and potentially even on a macro scale with all those other things going on. So thank you for watching, guys. I hope you enjoyed. Before we end the video, I'm going to look into a few things. I'd really appreciate it if you stuck around. So Bitget Exchange, this is the exchange we use on the VIP channel. It's the exchange that the Wolves of Crypto channel is basically partnered with. So everyone who watches this channel religiously, watches daily, whatever it may be, if you're a big fan of a channel, the best way you can support me on the channel and support yourself as well is signing up to Bitget. You get a 15% discount on trading fees by signing up using my referral link, and that is on top of the fact that this exchange is already 5 times cheaper than Binance, which is commonly referred to as the cheapest exchange. So this is the cheapest exchange in the market. It's very big for futures trading. We do a lot of futures trading here on the VIP group. And again, 15% discount on fees for signing up using my referral link, and also exclusive rewards and discounts on a monthly basis. We have some special stuff going on there. So again, sign up using my referral link to Bitget. I appreciate that, and you won't regret it. So secondly, we also have the Crypto Academy. If you like the way I do analysis, you like the way I look at charts, and you want to learn how to analyze charts for yourself and start trading for yourself on a professional level or even a semi-professional level, the Crypto Academy is the way to do it. We've got the Become a Trader 10-unit course developed by myself and my co-analyst, Megawell Crypto. We basically created this course and we released it in May 2022. Ever since that point, we've accumulated close to 100 students. It's a 10-unit course teaching you from step 1 to basically everything you need to know on how to trade cryptocurrency. And not only that, but also fundamentals around cryptocurrency. What is crypto? What is Bitcoin? What's the difference between Bitcoin and traditional financial systems, etc.? So we're looking into market patterns, candlestick formations, indicators, all that stuff. Go ahead and check out the website. Without further ado, I'll end the video there. Thanks for watching. Hope you enjoyed, guys, and I'll catch you in the next one. Cheers.